Welcome to Market Brief After Hours. It was another incredibly cautious session on Wall Street today, with a lot of moving parts keeping investors on their toes. We saw rising global bond yields, oil prices staying uncomfortably high, and a fresh wave of geopolitical uncertainty. Let's start with the big picture on the U.S. indices. How did the major averages shake out by the closing bell?
The major theme today was a clear rotation away from technology and into more defensive areas of the market. Because of that, we saw a split in how the indices performed. The Dow Jones Industrial Average actually managed to post a gain, rising 0.32% to close at 49,686. Investors were really looking for safety in those blue-chip names. On the flip side, the S&P 500 extended its recent pullback, slipping 0.07% to close at 7,403. And the Nasdaq Composite took the biggest hit, falling 0.51% to finish at 26,091.
That marks the second straight session of declines for both the S&P 500 and the Nasdaq. What exactly is dragging them down so heavily right now?
It really comes down to the semiconductor and AI-related stocks. They are facing intense selling pressure. For instance, Seagate dropped nearly 7% after its CEO warned that building new factories is just going to take too long. That commentary dragged the whole sector down. Micron Technology fell by almost 6%. SanDisk dropped 5.3%, and Western Digital lost 4.8%. Even the massive players weren't immune, with Nvidia and Broadcom each declining around 1%. When you combine that chip weakness with rising treasury yields, growth stocks, which heavily populate the Nasdaq and S&P, become much less attractive.
Speaking of yields, the bond market has been flashing some serious warning signs globally. How are treasury yields reacting to all of this?
They are holding right near their recent highs following a sharp global sell-off last week. The 10-year U.S. Treasury yield ticked up less than 1 basis point to 4.601%, which is right after it touched its highest level in 15 months. The 30-year yield also rose slightly to 5.133%, putting it near a one-year high. The 2-year yield did slip a bit, down more than 1 basis point to 4.065%, but the broader global trend is what has everyone spooked.
And that global trend is definitely rippling across the Atlantic. How did European markets handle this environment today?
Surprisingly well, actually. European equities managed to recover from some early morning weakness. The broader Stoxx 600 index rose 0.3%. Looking at individual countries, Germany's DAX had a great day, gaining 1.49% to reach 24,308. In the UK, the FTSE 100 rose 1.02% to 10,299, helped by the IMF raising its UK growth forecast to 1% from 0.8%. France's CAC 40 added 0.26% to 7,973, and Switzerland's SMI climbed 0.16% to 13,240.70, supported by news that the Swiss economy expanded 0.5% in the first quarter. The only major outlier was Italy. The FTSE MIB fell 0.91% to 48,669, even though their trade surplus came in at a solid 4.7 billion euros.
It is fascinating to see Europe rebound while Asia-Pacific markets seem to struggle significantly. What drove the headwinds in Asia?
Geopolitical anxieties played a massive role there, particularly the stern warnings from the U.S. administration toward Iran. But there were also major domestic economic pressures. In Japan, the Nikkei 225 retreated 0.97%. The really big story there is the 10-year Japanese government bond yield, which spiked to 2.80%. That is its highest level since May 1997. Inflation concerns are intensifying, and markets are pricing in a potential Bank of Japan rate hike.
Did the rest of the Asia-Pacific region follow Japan's downward trend?
Mostly, yes. Hong Kong's Hang Seng Index fell 1.22%, which is interesting because the government actually reported a very robust 5.9% GDP expansion for the first quarter. Mainland China's CSI 300 dropped 0.54% after industrial output growth slowed down to 5.7% in March. Down in Australia, the ASX 200 plunged 1.45% to 8,505.30, hitting a 7-week low as materials and real estate took a beating. The one rare bright spot was South Korea. The Kospi gained 0.31% to 7,516.04, almost entirely thanks to Samsung Electronics, which rallied 3.9% after government intervention successfully prevented a potential labor strike. Taiwan's TAIEX, however, felt the broader tech pressure and declined 0.68%.
You mentioned the US-Iran conflict earlier. That has to be playing a major role in the energy markets right now. Where do oil prices stand?
They are remaining firmly elevated as traders watch very closely for any disruption to global supply. West Texas Intermediate crude advanced about 3% to settle at $108.66 per barrel. Brent crude rose more than 2% to close at $112.10 a barrel. Prices actually eased a little bit from their intraday highs after President Trump stated he was holding off on a planned Tuesday attack on Iran, following requests from Qatar, Saudi Arabia, and the UAE. However, he did note the Pentagon remains prepared to act if an acceptable deal isn't reached, so that risk premium is still heavily baked into the price of oil.
We are going to take a quick break, but when we come back, we will dive into a massive portfolio revamp from Berkshire Hathaway, take a look at the crypto market, and break down the technicals in Forex and precious metals. Stay with us. Welcome back to Market Brief After Hours. Let's pivot to some major corporate news. Berkshire Hathaway's latest portfolio update is drawing a lot of attention today. What are the key changes under new CEO Greg Abel?
It is a pretty significant shakeup. The biggest headline is that Berkshire bought 39.8 million shares of Delta Airlines, which is valued at roughly $2.6 billion. That instantly makes Delta their 14th largest holding. They also opened a brand new position in Macy's, worth about $55 million. On the tech side, they significantly increased their stake in Alphabet, making the Google parent company their 7th largest holding.
Did they trim or exit any notable positions to fund these purchases?
They did. They trimmed their position in Chevron and made complete exits or heavy reductions in several massive names. That list includes MasterCard, Visa, Amazon, United Health Group, Aon, Pool Corporation, Domino's Pizza, and Charter Communications. It shows a very clear strategic shift in how they are viewing consumer spending in the financial sector.
Let's shift gears to the cryptocurrency market. With rate cut hopes fading and turmoil in the Middle East, how is Bitcoin holding up?
It has been a rough 24 hours for crypto. Bitcoin fell as much as 2.9% to $76,009, which is its lowest level since April 30th, before bouncing back to hover right around $77,000. We saw a massive unwinding of bullish positions, over $800 million liquidated in a 24-hour window, with nearly $500 million of that happening in just a 15-minute span during early Asia trading. Bitcoin broke through support around $77,800. Right now, structural support is sitting between $76,000 and $76,800. To see any meaningful sign that selling pressure is easing, we would need to see a daily close above $80,000.
I want to dig into the foreign exchange and commodities markets next. Starting with the euro to US dollar pair, how did the technicals look today?
Euro USD managed to reclaim some ground today. It edged higher by 0.25% to close at 1.1655. During the session, it traded in a tight range between 1.1608 and 1.1657. The really important technical takeaway is that the pair managed to reclaim the 50-day simple moving average, which sits at 1.1647. However, it is still trading below the 200-day SMA at 1.1682 and the 100-day SMA at 1.1705. Momentum is definitely improving after some choppy consolidation, but buyers need to push it above that 200-day SMA at 1.1682 to really strengthen the recovery outlook. If it fails to hold initial support at 1.1608, we could see renewed downside pressure toward the structural floor of 1.1550.
What about the British pound? Did sterling see similar momentum against the dollar?
Sterling actually had a fantastic day. GBP USD surged 0.82% to finish at 1.3433. It rallied sharply from recent lows and closed right near the top of its daily range, which was between 1.3302 and 1.3449. Price is now trading directly around a major cluster, the 50-day SMA at 1.3429 and the 200-day SMA at 1.3425. The pair is still capped by the 100-day SMA at 1.3480, which is the next major resistance level before the psychological 1.3500 mark.
And looking at the cross between those two, how did the euro fare against the pound?
Euro GBP slid sharply. It closed at 0.8676, down 0.53%. The pair failed to sustain its gains above the longer-term moving averages and reversed aggressively. It has now slipped back beneath the 100-day SMA at 0.8680 and the 200-day SMA at 0.8699. It is trying to stabilize just above the 50-day SMA at 0.8671, but the sharp rejection from the session high of 0.8729 shows that sellers are very active at higher levels.
Let's look at precious metals. Gold and silver can be highly reactive to the kind of geopolitical news and bond yield movements we saw today. Where did they close?
Gold stabilized today. It closed at $4,559, rising 0.45%. Buyers really stepped in to defend support at the recent swing lows around $4,480. Despite today's positive session, gold is still under near-term pressure, remaining below the 50-day SMA at $4,716 and the 100-day SMA at $4,786. However, it is holding comfortably above the long-term 200-day SMA at $4,329. Immediate resistance is up at $4,585.
And silver?
Silver staged a very strong rebound after heavy selling pressure in the previous session. It surged 1.98% to close at $77.39. Buyers aggressively lifted prices back above the 50-day SMA, which is at $76.82. Like gold, it is still below its 100-day SMA at $81.02, but the broader structure looks solid, holding well above the 200-day SMA at $64.46.
Before we wrap up, let's run through the biggest individual market movers of the day. Who are the standout winners and losers?
On the winning side, Revamp Holdings was the massive standout, jumping more than 27%. That was driven by news that Publicis Group agreed to buy the company in a deal valued at about $2.5 billion. Bio-Rad Laboratories was another big winner, gaining over 13% after reports surfaced that Elliott Investment Management had built a sizable stake in the company. Finally, Dominion Energy climbed more than 9% on takeover speculation, with reports suggesting NextEra Energy is discussing a potential deal.
And on the downside?
Hims and Hers took a big hit, dropping more than 10%. That followed their announcement of plans to offer $300 million in convertible senior notes due in 2032. And Regeneron Pharmaceuticals lost more than 9% today. The market reacted very poorly to weaker-than-expected Phase 3 trial results for its melanoma treatment.
It certainly seems like the market is digesting a massive amount of data right now, from corporate buyouts to macroeconomic shifts. We will keep a close eye on all of this as the week progresses. If you find this useful, please follow Market Brief after hours.